Hello everyone and welcome to our webinar, Conquering Your Credit Reports and Scores. My name is Xavier and I am from Transformance and I'll be hosting today's webinar. But first, before we go ahead and talk about our topic for today, let me talk to you a little bit about our organization, Transformance. Transformance is a nonprofit organization founded in 1974, and it is a United Way service provider as well as a HUD-approved multi-state housing, counseling, and education organization. Our mission is to empower individuals and families to achieve financial freedom. Our services include credit and budget counseling, financial education, student loan counseling, as well as our AIM program, our C2 Safe program, our housing and counseling, in addition to our debt management program and our bankruptcy counseling. Transformance, like I said, is partnered with United Way, and our future goal is to move over 250,000 people out of poverty in the next 10 years, helping individuals and families reach their goal of financial stability is what Transformance does. Let me tell you a little bit about one of our clients' history here at Transformance. Several years ago, Ben came to Transformance after experiencing a very expensive divorce. He was living out of his car and credit cards, and with the help of Transformance and through our debt management program, he was able to pay off all his creditors in a reasonable and a responsible fashion. And that Ben right now is a pillar in our community, having served at the pleasure of 2 U.S. presidents. Now, going to our topic for today, conquering your credit report and scores, we will talk a little bit about some basic information on credit report and credit score, and we will give you tips on how to protect your score and some tools that we have for you that might help you save some money. What is a credit report? Well, basically, a credit report is where you're going to find all your information regarding all your credit history. It's issued by all 3 credit bureaus. All 3 major credit bureaus are TransUnion, Equifax, and Experian. They keep your record of all your credit history, all the negative information that you're going to have or experience is going to stay there for 7 years. Except for bankruptcy, that bankruptcy stays on your record for 10 years. But the good thing is that all the positive information that you have will remain on your record forever, meaning that every time you pay off a credit card or you pay off a mortgage or an auto loan, that will be reflected on your credit report for each of the 3 credit bureaus, and that will stay forever. Now, here you're going to find a website, www.annualcreditreport.com. On this website, you can have 1 free credit report per bureau once every year. So you can enter this website, get your free credit report from all 3 credit bureaus, but remember, there's only 1 per year. Now, what's on your credit report? As you can see, your credit report contains your identify information. It contains all the inquiries into your accounts. It contains account summary and public records. Remember that no criminal record and no medical record appear on your credit report. That should not be there. As you can see, the top part, there's the identify information, followed by all your account summaries, then the inquiries that you initiated, and then at the bottom you're going to see the public records. Now, the 3 credit bureaus, like I mentioned, they are Equifax, Experian, and TransUnion, and they provide a critical role to the lenders when you want to take out the loan or you want to take out the credit card. Now, based on a 2012 report from the Consumer Financial Protection Bureau, the CFPB, the three agencies, they provide information on more than 1.3 billion trade lines every single month. So if you can see, they handle a lot of information. The Consumer Financial Protection Bureau, CFPB, understands that the biggest challenge that the credit bureaus have is to accurately match individuals to credit reports because of the excessive amount of trade lines that is out there. The primary, again, the CFPB is the primary federal agency in charge of informing and protecting about finances in the United States. The three credit reporting agencies, they hold information on over 200 million adults, and between 32 to 38 million report potentially erroneous items on credit report. This is why we encourage you to go to the website that we mentioned before, the annualcreditreport.com, so you can have your free credit report annually from all three credit bureaus. You can keep track of everything, and you can see if the information that is on your credit report is valid. Like I said, the biggest challenge right now is matching all the records to the right consumer, and of course remain vigilant. Now, with that being said about your credit report, let's talk about a little bit about your credit score. Your credit score, your FICO score, is determined based solely on the information in your consumer credit report. This is where what's on your credit report will determine what's your credit score. How does this works with a risk relationship? Well, basically, you have two people that want to borrow the same amount of money. Let's say we got two people, John and Mary, and they both want to borrow $5,000. Now, let's say John has a FICO score of 580, while Mary has a FICO score of 710. The thing is that your FICO score is very important because it will, for a lender, it will be a higher risk lending money to John than to Mary, because John has the lowest FICO score, and by that means then he will be more greater risk for that lender. On the multiple scores, you just remember that you may encounter three different scores of your FICO score, because all three major credit bureaus, they use different database to calculate, so you may have different numbers. The FICO score is used by 90% of all lenders, and of course this impacts every loan, every credit card that you get, every payment, and the interest rate that you get will be based on your FICO score. So how can you manage and what to consider when trying to get a higher FICO score? Well, the number one reason that the FICO score considers is your payment history. Your payment history takes 35% into your FICO score, followed by the amount owed, that's 30%. So basically paying on time and keeping balances ideally at zero but not too high will help you increase your FICO score, since these two things cover up 65% of your FICO score. And then the remaining is divided between the length of credit history, that's a 15%, and types of credit and new credit round out 10% each. Here are some tips for you to be able to raise your FICO score. Obviously, like I mentioned on the previous slide, the most important thing is to make your payments on time. Get current and stay current. Work through collection accounts. Keep your balances low, ideally at zero. That will help you because that, remember that takes into account 30% of your FICO score. Pay off your debt instead of moving it around. Don't open or close accounts unnecessarily. Rate shop within 2 weeks. Recommendation that you to look around for different options for different rates. Please don't go with the first one. Check your credit report regularly. So remember, the annualcreditreport.com is there for you. Manage your credit cards in a responsible manner. Of course, credit cards can be very helpful if used wisely. And if you have any debt problems, let Transformance help you. Our certified coaches will be here for you to help you get out of debt and give you advice or education on how to improve your credit score, how to review your credit report, on how you can get out of debt. Like I said before, a higher scoring will allow you to get faster loans. It will make decision making a lot more fair. More credit is available for you, and of course, the rates will be lowered. Now, here's an example on why having a higher credit FICO score will help you. This is on this example, it is a $300,000 30-year fixed rate mortgage, and let's say a person has a FICO score between 760 and 850. Well, that person will get a 3.096 APR with a monthly payment of $1,280, and the overall cost of the mortgage will be around $460,000. Now, if another person comes and applies for the same mortgage but has a FICO score around 640 to 659, that person instead is going to get a 4.139 APR, a monthly payment of $1,456, and the overall cost of that mortgage will be $524,160. So you see a big difference here between having a good FICO score and a lower FICO score. The difference on what only your rate is going to be, but your monthly payment and the overall cost. Now, a little slip can cause a big fall. Here's some examples of what will be the effect of your FICO score, how much it's going to drop depending on the mistake or the situation that you may encounter. For example, a 30-day late payment, if you have a FICO score around 680, your score is going to go down anything between 60 to 80 points. Now, if you have a 780 score, then that one will go down, your FICO score is going to go down between 90 to 110 points. Basically, the higher your FICO score, the greater the downsides will be if anything of this situation happens. Now, for credit repair, when we're talking about credit repair, remember that you are in control and you are the only person that will help yourself improve your credit score. Remember that time is your friend, and time and plus good behavior heals wounds of the past. We encourage you to explain errors in writing. Remember that companies have a timeline for responses, and please avoid any credit repair or credit fixing companies. Finally, in our tool section of this webinar, I'm going to talk to you a little bit about our mobile app called Pocket Change USA that you can download for free on your iPhone or your Android phone. It's an app that allows you not only to learn about how to manage your budget, and keep everything in order, but it allows you also through interactive games so you can learn through playing. You can have a planning section so you can set goals that you want to do, and the connect tool that will allow you to connect with us if you have any questions about our services or any questions on how to manage your budget. But here I'm going to talk a little bit about our planning section. As you can see on this one, you can plan any goals, either individual or family oriented. There's like in this example, this person made a $8,000 goal with a target date of August the 1st of 2017, and this person estimated that his or her deposit will be around $400 monthly to be able to reach that goal by that date. This tool will allow you to do that because it keeps track of everything. The planning section is the Fitbit of personal financial accountability. You can set a plan of goals and milestones. Then the application in return will give you a message of how you're doing, so you can keep track of everything. You can keep track of all of your expenses here. You can take it anywhere. If there's an area that you found that should or you have to make some changes, you can do it on the application. And the application will also give you weekly emails providing updates on your goals and giving you updates on your progress, and it will give you feedback on how is your process going. Well, everyone, I truly appreciate that all of you came to our webinar, Conquering Your Credit Reports and Scores. It's been a pleasure to be here with you. I hope to see you soon. If you want to learn more about Transformance, if you want to learn more about our upcoming webinars or more information about our services, please visit our website at transformanceusa.org, or you can call us at 1-800-249-2227.